and we can start the session. So I'd like to welcome Hamad Fahad, our mentor today for the session of fundraising. Once again, Hamad, thank you very much for joining us today. If you don't mind, I'll just give the teams a brief description of yourself. So Hamad is the CEO of Ascentech and the founder. Sorry, Fahad, can you mute yourself? Because I think your mic is on. All right, sorry about that. So Hamad is the CEO of Ascentech and the founder and CTO of WowCall. He has over 15 years of experience in the IT and telecom industry as an executive, consultant, entrepreneur, and investment advisor. So some of his projects included founding one of the first private licensed companies in the GCC with the deregulation of the Bahrain telecommunication market, and also spearheading the launch of one of the top calling cards in India. So today he helps startups and tech companies ranging from sports tech to fintech to match them with the opportunities and investors, while also supporting in setting technical goals and forming their teams. So with that said, thank you very much, Hamad, again for joining us. And here you go, the session is yours.
My pleasure. Let me just begin with sharing the screen really quick. All right. Just to double check, screen is shared. Everybody can see it clearly?
Yeah.
No.
Okay, perfect. Perfect. So I went into deep thought about what I'm going to present today, something that's going to be relevant to everybody. And I thought how to talk to investors in order to get funding is going to be a really good topic. First off, every workshop I give is a learning experience for me as well. I meet amazing people. I make good friends. And usually my presentations are face-to-face, where I can gauge whether to slow down or speed up and get a sense of where everybody stands. So please interrupt me if I'm going too fast and if you have any questions, okay? So don't be shy to open your mics and ask me questions about your startups specifically as well. I've gone through all your pitch decks, so I know your startups already. I've gone through your financials. I've gone through what your product is about and wanted, to help set the stage. You have a demo day coming up and you'll want to create an impression for that demo day, I'm sure. Maybe secure some funding, get interest from investors, from media. So your participation in the demo day, or if you're participating in accelerators, startup events, the audiences you care about are the investors, right? The angels, the VCs, the funds, fund managers, etc. In most cases, your customers will not see your demo day presentation. Okay, so a point I want to drive home first is that pitching to a customer is not the same as pitching to an investor. Our wording, our message, our data should reflect that. So basically the tip is, if you pitch correctly, you're probably not going to use your demo day pitch as a marketing material for your customers, okay? Just last month, I went through a round of evaluations for seed investment for some startups in the GCC area. And I wanted to go through how investors evaluate a startup and hopefully give you some practical tips that'll give you more confidence when fundraising that maybe you can use to improve your pitch decks or when you're communicating with investors. I'm hoping by the end of the session that maybe you'll be more confident when you have to meet with an investor or we have to talk about your idea. All right, so the first question is, and I like to start with questions, is why raise funds? First off, maybe you want to hire people, right? Or maybe you want to survive, the COVID crisis. Yeah, you know what, it's pretty tough. I need to kind of raise some funds. Maybe you want to pay your salaries or pay your rent. Or maybe you want to grow. All the answers here are wrong, except the last one when you're talking to an investor. Whenever you're communicating your funding, mentioning anything other than growing will push investors away, okay? Investors don't want to pay you to hire people to develop your product, or hire a technical officer or a developer, or survive a crisis, or pay your expenses. They want to invest in global or regional expansion, access to new markets, or driving your traction upwards. And this is precisely the reason, and we'll discuss this in depth later, that putting your cost accounting on your pitch is usually a bad idea. Some of you have done that on your pitch decks, putting how much it cost my monthly costs or what my expenses will be is usually a bad idea, because even if it's not true, okay, it'll give an impression that you need to fund for operation rather than fund for growth. For example, like fund for surviving rather than funding for expansion. So something that's important is communicating and messaging is important when fundraising. Okay, so let's keep that in mind. The next tip is that investors, they might not also understand the problem that your startup is trying to solve. Okay, so they're not, I guess they don't, some of your startups, for example, smart shoes, they probably don't have anybody who's visually impaired among them. Maybe they can't understand what the requirement is. So you need to kind of explain that to them. They're probably not freelancers or corporates, for example, for Tripod, or they're probably not interested in, artisan decor for the pop-up market. They're not educators. They're probably not pet owners, So you're not really talking to your customers. So that's number one. And also they're only interested in your product. And I know it seems a bit harsh, but they're interested in your product and your company as long as it can build a big company and make them money. So your product is a small part of your presentation. You need everything else around it to kind of bolster it up and make the investor more interested. Okay, please interrupt me if I'm going too fast, guys. All right, maybe I should slow down just a bit. I can't see many faces, so probably don't know.
It's fine.
All right.
It's
No
going
problem.
good. Yeah, it's
Good.
going good. Thank you.
Yeah. Also, there's a myth that ideas are important. And this is a myth going around, I guess, the startup community. I've been pitched, I think, a couple of hundred companies in the past year. And I've seen many ideas. When it comes to investors, when we go through these kind of ideas, what you're judged on is execution, right? Not the idea. What you've done, how you've done it, and your ability to do it. So how can you prove it? By executing, right? Showing that you've executed, showing that you've done something already. Traction is really important. So the idea is not enough, to kind of convince, investors, and it's not as important as you might think. All right. So the next one is another secret. Most investors, when they invest, they usually invest because they're scared. I know it might seem confusing. They're fear, right? They don't invest because they love your idea, but they're scared of losing out. And you can see this as a behavior of investors. Even in the real estate crisis in 2008, many people were investing in real estate because they were worried that, hey, if I don't invest now, the price is going to go up, right? They don't want to lose an opportunity, right? It's called the fear of kind of missing out on kind of this growth. This is the reason why investors want to invest. So it's important for you to create leverage or strength on your side. Show the investor that, look, if you don't invest with me, you're going to lose out. Look, I'm growing. I'm already moving, right? So it's simple supply and demand. So just keep that in mind when you're presenting your pitch. And this applies to your demo day as well, right? You want to get people excited. So if you go to an investor, right, and pitch that in order for you to grow, you need their money. You say, look, I want to grow. I can't grow, but I need your money so I can grow. They won't fear you, right? Because they know that you can't do anything unless they give you their money. So they're going to take their time. They're going to say, okay, look, this person doesn't have the resources. He needs my money, so let him wait, right? But if you tell them that I'm already going ahead, I'm already building it up, I'm going to be launching this week, and I already have this many customers, etc., then the ball is going to be on the investor side, right? So keep that in mind, very important. So remember, whenever you pitch or whenever you present or plan your company, you need the leverage or the power to be on your side and not on the investor side. So if you choose a plan or a pitch that puts all the leverage in the investor's hands, right? If you tell the investors, yeah, look, I'm going to run out of money in 3 months. I need your help. You have nobody to blame except yourself. All right. So keep that in mind. Never show weakness in execution to an investor if you want to get the confidence. And this is a mistake. I'm sorry to say, 95% of startups do in their pitch. They kind of, when they're talking about how much they want, they kind of show their costs and they show their weakness, which kind of makes investors take a second look and say, you know what, let me think about it. So today's discussion, yes, it's going to be about investor pitching, but it is also about how to build leverage when you're pitching or talking to an investor and communicating with them, and what to include, and most importantly, what not to include when you're talking to an investor. Okay? So let's talk about what pitching is not. Just pitching is not a technical outline of your product. Pitching is not a historical record about what you did in the past or a product deep dive. You don't want to talk too much about your product. It's not a financial report like many of your pitches where you talk about your finances, your costs, and your break even, and when you expect. It's not that. It's not a business plan. Business plans, according to many of my colleagues, is 1990s. We don't do business plans that much anymore these days. We do financial statements at most. And then it's not a marketing brochure. So you're not marketing to your customers, right? So the question is, why do we pitch, right? And I usually ask that question to everybody here. Why do we pitch? Some people will tell me to tell people about your company. That's part of it. To raise money, right? I want to get money. That's why I pitch. Don't expect that after any pitch, an investor will take out their checkbook, sign a check and give it to you. All right. That's going to come next time. But there's a main reason. And some people would, one person I think answered, I want to pitch because I want to get rich, right? And that's 3 to 4 steps ahead, right? That's 4 steps ahead, maybe if your company gets successful. So do not think 1, 2 steps, 3 steps, 4 steps ahead. Think the first step. The reason we pitch, and the only reason we pitch or talk to investors, is to get attention. It's about getting investors and people to want to have a conversation with you. Okay? You want them to open their eyes and say, oh, wow, I have some questions. It sounds interesting. So I want investment, right? We want investment for our companies. But the first step is to have a talk to an interested investor, an investor who shows some interest to you. You want to be on the news, but the first step is to get a reporter to kind of like want to talk to you and say, hey, can I talk to you? Because it's interesting. An investor will not like pay you immediately. They're going to go through due diligence. They're going to have maybe 1 or 2 or 3 meetings with you and then ask you, hey, can you tell me more about this? And that's when you kind of share the information that they ask for. So if they ask for, I want your finance reports, then you say, you know what, I prepared something, right? So keeping that one-step mindset is very important to make you memorable so we don't forget your company, especially if we're looking at so many companies. We say, oh, that one's pretty strong, right? So you have your financial projection. You have details on your cost. Don't put it on your pitch, right? Keep it on your Rolodex, in your pocket, right? Keep it there and bring it out when the investor asks you a question. When the investor says, we want to talk about your budget, say, okay, yeah, I made a budget sheet. I made it ready. Here you go. This is my budget sheet, okay? But you don't need to present it right away. Investors are pretty clever at kind of understanding where the business can go. Give them the benefit of the doubt. So basically, my solution is prepare, but do not present. Most investors are pretty they're pretty good at kind of understanding your budget by looking at the general idea, okay? Just show them the way to go ahead. All right, now regarding your pitches, and your demo day is coming up, I'm not sure about how your pitches are. Some of yours are pretty long, some are on the shorter side. My suggestion is 3 minutes, not more. It takes me 30 seconds to decide whether I'm interested in that idea or not. 30 seconds. I'll not admit it. And I don't think any investors will admit that they're not interested right away. because there are great ideas and great teams that were probably never invested in because their pitch was not that great, or maybe they talked too much, or they didn't present it very, very nicely. So 3 minutes. Actually, if it was my pitch and if it was my startup, I'd make it 2 minutes. That's me. Because the more you say during a pitch, the less an investor will like kind of remember the important things, right, about your company. So why not just say the important things? If your pitch is just saying the important things, then the investor will leave your pitch saying, you know what, I remember these things that they wanted me to remember. And the less you say, the less chances of mistakes and doubts. All right. We'll go through a few kind of questions that you'll need to answer in your pitch. And, you have your problem, you have your solution, you have your market, and I'm sure you went through that. But we're going to go specifically on the questions you need to answer. And always ask yourself these questions where you're presenting. The first question is, what do you do? And it seems simple, right? What do you do? It's one sentence only. And it should be easily understood. And actually, in the next few minutes, we're going to go through every question. We're going to give you some examples and some ways people are doing it wrong as well. And what you do is important, because if I am looking at your pitch and I don't understand what you're doing, not exactly, then the rest of the pitch, I'll be sitting down trying to figure out what are you doing exactly, right? And I'm not really paying attention to the next slides. I'm trying to figure out what you're doing. So when you open your pitch, you need to make sure that even if you're starting with a problem or a question or whatever, you need to make it really clear what you're doing. And you won't believe how few startups, very few startups, can easily, clearly say what they're doing. Okay? They kind of make it very complex. The next question is, what is your market size? And this is something very important to an investor, because this is going to show us your growth potential. It's where you talk about the problem you're trying to solve and how big this problem is. The next question we're going to go is, how far along are you? And this is called traction. And I'm sure you heard of it. The most important things that builds leverage with an investor is what you've done already. Show how you executed with your budget. That's limited, of course. What you accomplished, what customers you've gained, and we're going to be talking about different types of traction. And I think at your stage, many of you have not launched yet. So when we talk about traction, we're going to talk about what kind of things you can say that can maybe kind of help you gain leverage with the investor. And how will you make money is a question that we want to know. You need to have something solid and a solid plan that shows confidence that this is how I'm going to make money. This is the reason why I chose the way I'm going to make money. It needs to be believable and based on data, maybe on some acceptance, maybe some surveys you've done. And we need to believe that the customers will actually pay the amount that this problem is worth. So we need to make sure that, okay, you know what? We believe the customer is going to pay this amount. And the next question will be, what makes you special? This is where you can talk about your competitors or what insight you have. Do you have the ability to build the product that you're working on, for example, is another question. Do you have the ability to kind of position yourself in a special way compared to your competitors? And of course, who is on your team? And I can argue that looking at the founders, we kind of analyze the founders a lot. And that's part of my job as I'm a selection committee member of an angel fund, where we kind of look at the founders and see whether they can do it or not. They can build this company that they're promising to build or not. And one of the questions we ask is, can this team build what they're saying they're going to build? All right. Is this team going to stay together? They're not going to break up. Those are the kind of questions we want to know about who's on the team. Nothing more. So whenever you explain your product, or you create a slide, you have an interview, you want to talk about it, make sure that these questions, you think about them and you know the answers to them. We'll go through all the questions, as I said, and we'll look at techniques of how to kind of improve it. But before we do so, I want to talk about your 30-second pitch. And this is what I tell every startup, you need to have this ready. It's 30-second pitch, needs to be memorized. When you talk to an investor, when you talk to media, it should be solid, rehearsed, conversational, not like a robot. You need to make it conversational. And once again, your objective is to build curiosity and interest, not to give them proof of your business plan or your finances, nothing. Curiosity and interest. And to make it simple, it's going to be 3 questions you're going to be answering in this 30 seconds. What do you do? What is your market size? And how far along are you? 3 questions. All right. I'll give you an example, I guess. I'm just going to make a startup. I have a startup. It's a chicken nugget delivery service. All right. I make it up. Hi, how are you? Yeah, my name is Hamad. We are part of the chicken nugget delivery service. We create chicken nuggets delivery service for retired people over the age of 70. You know, we realize that 70% of the retired people, they love chicken nuggets after 9 p.m. And the problem is that most of them, they don't know how to order chicken nuggets from their phone. That's over 1 billion people in the retirement homes who wish they had chicken nuggets at night, but they can't do it. Currently, we have 30 retirement homes signed up with us for our chicken nugget delivery service. And this month, we signed up 15, and we have a revenue of 15,000. And next month, we're expecting our revenue to increase to 25,000. That's it. That's your 30-second pitch. All right? The idea is you want to talk about what you do, your market size, how far along are you, and just memorize that so that whenever you're talking to an investor, you can kind of give them this kind of 3 steps. A few more notes before we get started. Make sure that your pitch, and this is for your demo day, is easy on the eyes and ears. I've seen a lot of pitch decks today that were too much text, too much writing. People are impatient. Investors are generally impatient. And of course, dumb it down. Investors are not industry experts, right? We don't want to talk about the details of your artificial intelligence implementation or the details of how your blockchain works or anything like that. You want to stick to the problem, you want to stick to the market, you want to briefly discuss your topic, okay? Let me just give you a bad example. This is a slide. What do you think of this product slide? You like it? This is a slide from an actual pitch. As much as you think your idea is complex, guys, it can be explained very simply. Trust me, I'm a telecom engineer. I can explain how 5G works in 2 ways, right? The hard way and the easy way. Your job is to use the easy way. Your job is not to make investors an expert in the inner workings of your product. And this is new 10x. But even me as an engineer, it took me around, 30 seconds to kind of understand what's going on here. And believe me, if you spend more than 30 seconds on the slide, there's a problem. Basically, Nutanix provides a better hard disk management for cloud data centers. It's faster, uses less resources, highly compatible. Other details are not important, right? The details of the buses and the flash disks and the hard, they're not important, right? Show me some traction and show me you can move it on. So even a complex idea, such as a hard disk management system, can be explained simply, right? So if you look at your own startups, even your startups can be explained really simply and straight to the point. So let's go to the first question, the what do you do? Okay. I've seen many pitches on busy days. I sit in a room and a new company comes in and pitches every 10 minutes. And the main thing I realized that I didn't realize when I was a founder is that most people, they have a problem with this part, right? The first 10 words that they say when they start up, when they want to talk about their pitch is not understandable by humans. It's crazy because everyone focuses on like buzzwords and action verbs like must have, transformation, AI. And I'm like, look, I don't know what it is they're talking about. So it's about developing a confidence, saying exactly what it is, what you're doing, and what's behind the words. So let's just get into it. Too much noise. Look at these words. These are words that you should not be using in your pitch. Improve, world-class, transparent, innovative. The startup scene is very noisy. There's a lot of startups, not only in the region now that they're growing, all over the world. And investors have to sift through every startup and, kind of look for the jewel, right? The startup that they want to invest in. And out of so many startups that I've met, I only remember a handful of them. And I probably have strong interest in 1 or 2 of them only. The problem is that there's too much kind of this kind of buzz going on. And after going through all these pitches, I think there's a chance that there are some startups that were very good that I haven't vouched for because of the communication that they went through. So let's look at some kind of ways you can explain your product and keep it simple, I guess. You need to be conversational. So you need to tell a story because investors are people. So you're going to be telling a story about growth. You're going to tell a story about your traction, about your team, but it's going to be a story, right? You don't want to go too technical and focus too much on numbers. Number two, you want to make sure it's reproducible. You need to be empathetic. What do I mean by reproducible? Meaning that if you tell an investor what your company is about, the investor can tell his friends. If they can't clearly tell their friends, then we have a problem here. You want to keep it as simple as possible so that the word of mouth can work to your advantage. Okay? That's really important. Number three, keep it simple. And I think we discussed this a lot. That's why I highlighted it. And there are many studies that show that when someone is interested in something, it appears simpler than it actually is. It's an actual study that's being done. For many of you, your businesses are simple and straightforward, right? But you need to transfer that kind of simplicity to the investor's mind. And sometimes when you're presented, you kind of make it complex, that the investor is not having the same kind of idea of your startup as you are. Which comes to the point, and the final point of this: avoid MBA speak, industry jargon, marketing speak. Okay, so expressions such as strategic alliance, streamline.
May I ask, what do you mean by avoid MBA speak?
Okay, yeah. So MBA speak, like streamline, strategic alliance, things like, we're going to be leveraging our customers to kind of to grow forward. Those kind of MBA speak. Got it? Usually MBA speak is what you talk when you want to present a business plan. What we want to do is we want to kind of make it conversational. Okay? Because it gets in the way of your idea. So when you have an idea and you want to kind of present it to everybody, you want to make sure that in presenting the idea, you are not kind of diluting the idea with words such as cutting edge, pioneering, best in class, search optimization, because it takes away. These words can be erased and you can just simply kind of present the idea without having to fall back on it. I'll give you some examples right now. We'll go through some examples, okay? Let's do some examples. These are actual companies that I've worked with. This is an example of a person explaining their company. We transform the attitudes of individuals and organizations and allow them to live a healthier, more productive lifestyle. What do you guys think of this? The first question you want to answer, right? What do you do? Do we know what this person does? We transform the attitudes of individuals and organizations and allow them to live a healthier, more productive lifestyle. I'm not sure what they do. We know what they're trying to.
It's very long.
It's long. Thank you.
The sentence is very long and open-ended.
Exactly.
It's not specific.
It's not specific, exactly. We don't know if it's an app. We don't know if it's a device. We don't know anything. And the second question we ask ourselves, are we excited to learn more? Are you excited? First, I need to understand what it is first. Maybe next slide, it'll tell me, and then I'll get excited. I can't get excited over your vision of what you want to achieve, okay? This is an example from a real startup. Another example, and keep in mind, every time the background is red, it means it's an example of a bad example, not a good example, right? This is another one. We utilize IoT and artificial intelligence to allow manufacturers to save money and efficiently manage their maintenance operations. Once again, efficiently manage their maintenance operations. I don't know exactly what they do, right? How? They're not answering the how. Am I excited? I need to understand what they mean exactly. So let's go to how to improve this. And remember, this is the same one, and I'm going to improve this one. We make a device that helps factories detect machine defects before they happen. As simple as that. Do I understand what they do? Yes. It's a device that detects defects in factories, in machines. Who's my customer? Factories. Am I excited to learn more? It seems simple. It seems powerful. The next question I have as an investor is I wonder how big this market is and what their traction is. Now the investor can ask you the real questions and he can be interested. Now the investor can kind of move to the next level with you. So simple, sufficient, reproducible, no jargon, and interesting. Okay? Let's go to another example. And this one, I don't think you'll like it, Huda, at all. Too long. Our company makes low cost and low power consumption air pollution detectors based on AI targeted at industrial cities to help them efficiently cope with governmental pollution laws. Do I understand what they do?
I get lost with this one.
It is, definitely. We understand what they do. Air pollution detectors to help with pollution laws. Am I excited to learn more? Yes. Yes. It seems a bit complicated though. Why does it seem complicated to us? Because they decided to make it sound complicated. Notice the idea is somewhere there, right? The founder has put some buzzwords there, and you can find those buzzwords over there. Complex ideas, and it's as if, she is trying to say, the basic idea is this, but it's more complex. And it's like, and this is true for many founders, many founders. They tend to put up a defense shield around their ideas, right? Because they feel their idea is too simple. I need to kind of make it sound interesting to investors, right? And you don't realize that simplicity and clarity is the way to attract investors, not kind of pushing your idea higher than it should be. Okay, so let's take this and fix it. And I'm going to fix it kind of dramatically. We produce air pollution detectors for industrial cities. That's it. Now, a founder might look at this, and actually this founder who's doing this startup looked at me and said, no, man, what is this? No, my idea is more complex than this. Why are you watering my idea down? My company is advanced. It does advanced things, many complex things, not exactly the words, but that's what we were arguing. And the biggest myth for new founders is you don't have time to be technical. Don't worry about oversimplifying. It shows clarity of thought. Okay. I have a few other examples. I don't want to spend too much time on this because we're running out of time, but this is an example of a bad one where too much text on, in front of you. This is an example of a good one. We make airlines pay you $650 for screwing up your flight. As simple. We know what they do, right? They get compensation from airlines. Am I excited? Yes, let's find out more, right? So what we want to get to know, and the star lesson for today, is if you are efficient at describing your idea with words by talking to media, talking to investors, pitching your idea, it shows that you have clarity of thought, which gives me an impression that you are probably efficient at building your product. You're efficient at solving problems if you face problems, and you're also efficient at running a company and making money. It's very important and very overlooked. Remember it. Showing that you're clear in your thoughts will show me that you're clear as a founder. Take that into your heart. Let's talk about the next question. What is your market size? So you're solving a problem for a target market, and the urgency of your problem depends on the market, right? And your market determines whether the problem is worth solving or not. So the problem and the market should be connected, in my opinion. So you need to have some really compelling problem with a good market. How many users can become your customers, and how much money is pumping, how much people in your industry are spending money. So let's look at a few mistakes. And these mistakes I've gotten out of your pitch decks and out of startups I've worked in the past. The first mistake is top down.
I have just a question with the previous one.
Yeah.
How about if the target market or the target niche you are targeting, they are marginal or minorities? It doesn't represent the bigger populations. But as a problem solving for this segment, you can state it as severe for solving their problem and
Exactly.
very valuable.
Exactly. So if it's severe,
even if they are minority, yeah.
Got it. Yeah, definitely. So the problem, so we're going to be talking about it when we're talking about the market. You have a smaller market, but your problem is urgent, right? And this is something that investors like, and which means that you will get a bigger portion of that smaller market. Exactly. Exactly. So we're going to talk about different kind of ideas of market sizing and looking at how, how investor looks at your problem. We'll get to that slide. So let's look at a few mistakes. Top down. All we need is 1% of the market. This is a common mistake where people on their presentation, it's kind of lazy. This is my industry size. And, all we need is 1% of the market and we'll become rich. You know what I'm talking about. This is the wellness industry is 10 billion and we expect to get 5% of this industry. And this is the value. This is called a top-down approach because it doesn't show insight. Everybody's doing it, guys. And I'm telling you, look at the demo days that are past in Bahrain, outside. People are doing this right now. They are giving out a generic number and saying, we expect to capture this percentage of the market. Instead, we need to do a bottom-up approach where we talk about what we're doing currently and actually give some insight to the market. The second mistake that people usually do is problem size is not market size. And let me explain that. So sometimes your product solves a problem, right? And you're saying, the customers are losing 60 minutes a day doing something. They're losing 60 minutes a day. And, and the cost of the 60 minutes is $20 per day. Therefore, it's an 80 billion market of the cost. Never talk about the cost of the problem or how much people are losing to justify your market. You need to look at substitutes or competition, what they're spending already, and you start from the size. So never kind of justify that, look, I'm going to save them 60 minutes a day. That 60 minutes is worth this much. It's too confusing. It's too many assumptions. And usually investors look at it and say, it's not really that clear. This is the second most common thing. And the wrong market, of course. For example, you're selling masks for airline passengers. And the market size of the airline travel agency, I don't know, it's probably 400 billion. So you say, the market is 400 billion, right? That's the travel market. But that's not your market, right? You're selling masks for the airline industry. You're not an airline yourself. You need to calculate based on the number of passengers. So you do it bottom up. You say, okay, there are this many passengers who fly. Around 20% of them will be using masks on the flight, for example. I don't know exactly. And we're going to be selling it at $1 per mask. There are approximately 4.3 billion passengers. You multiply that by $1 and you get a 4.3 billion market rather than a 400 billion market, right? So this is kind of common that people do. At the end, as an investor, and when I'm listening to your numbers, right? I'm sitting down listening to your numbers and I'm taking note in my mind. I'm either believing the numbers or I'm not believing the numbers. Your job is to make it believable. And oftentimes it's not about just giving numbers, but also making it relatable and easily discernible. Like saying, you know what, it makes sense. Don't put too many assumptions. Don't make it too hard. All right? So when we're looking at your market and your problem, and this goes back to what Huda mentioned, we're looking for a market and a problem that is popular, that has millions of users. This is an option, right? You don't need to have everything here, but this is something we look for. If your problem is a lot, we're interested. Convince us. We're looking for a problem that's rising, right? A problem that's becoming worse and worse with time. So for example, the amount of people who are facing this problem is going to be this much next year. Usually 20% per year is a very good indication, right? We're looking for something urgent or immediate. And this goes to you, Huda. Something that is urgent, something that is important. So mention it. When you're pitching, mention why it's important. Show some proof that it's important. We're looking at something that's costly. Of course, you're not going to use this for your marketing to market size. But look, if it costs people a lot and you're going to give them a solution that's cheaper or more convenient, then that's a problem that we're interested in. The industry is spending this much on it. So we're going to make them save on that amount. Okay? So that's an important thing we look for. And we like things that are needed by regulation or so forth. So if, for example, CBB comes with a regulation that introduces a new kind of fintech product, and it's an opportunity, it's a new regulation. For example, open banking is something that's of a regulation where a regulation came out that all banks need to kind of incorporate open banking. So businesses within that regulation that's a market that we can look at. And something that's frequent, right? something that people maybe every minute they'd like to check it, daily, hourly. For example, Facebook is an app that people check in on daily, Facebook or Instagram, and hourly. So we like problems that are frequent. Any questions,
I
Hida?
have another question in here. Sorry,
Right.
I keep asking lots
Sure.
of questions because your presentations rings lots of bells in my head.
Sure.
For example, needed the regulations. At the beginning, shall we state just the problem, because and the solution as we go through the presentation, and what is needed? Shall we keep it at the end, or we should state it in the beginning? For example, as a regulator, or as a regulations. In my case, we have a software for education. So it's Ministry of Education. It is the entity or the authority that has to be engaged to implement this solution with their help and cooperation. So can we state it in the at the beginning, or keep it as just as a collaborator for the solutions?
Yeah. When presenting a pitch, no matter what, there needs to be a flow in the pitch. It's very important. You're telling a story the entire way through. I don't want you to think of it as sections. You're going to be telling the story, the compelling story. So in your case, if there's a regulation that helps you, you're going to mention it in the beginning. So you're going to say, there is a big gap in the market currently for I don't know, your company is the one that does homeschooling or collaboration. I don't know which one it is. Sorry, Huda.
Yeah, homeschooling.
Homeschooling. I read about it. Yeah. Okay. So we provide homeschooling solution, and it's a very big gap in the market. Around 30% of the people need. So this is how I would do it. 30%, around 7% of the student population requires homeschooling. This market, and there's a gap, meaning, and there's regulations in the Bahrain government and regional government to kind of encourage kind of quality education in the homeschooling industry. That's why we've introduced our homeschooling. So keep it a story, show why it's compelling, and kind of move through it. We can do, Huda, if you want, we can go through your pitch, and we can kind of create that story together if you want in a one-on-one session. Definitely, I'll share the information. We can sit down and go through ideas. What do you think? Okay. All right.
I will let you know. Yeah.
Okay, no problem. Let's go to the next one. These are examples of good slides. This is from 500 Startups. It's Open Door, a company called Open Door. It's a correct way of showing market information. It's visual. It's simple. It follows a rule that I follow. 1 and a max of 2 metrics per slide. It shows popularity of a problem. Millennials are flocking to cities but can't afford it. So 88% of them live with roommates. So it shows that there's a popularity. It shows that the problem is increasing with time. And it shows the target market, which is millennials. Okay, so this is a good example. Another good example I want to show is Airbnb's famous market slide. This is how many trips that were done on Airbnb on the right side. This is how many, the online kind of trip booking system is worth 532 million. It's worth much more today. And the total trips book is 1.9 billion. So it shows that Airbnb can expand further to investors. So we want to know that, okay, is there a big enough market for you to expand in? Okay. These are good kind of simplistic slides that you can kind of take as an example. All right, let's go to our next question. Our next question is, how far along are you? Right? The world is full of, I don't know, I don't want to use these words, but fake entrepreneurs with amazing ideas, right? The real entrepreneurs are those who do not just talk ideas, but those that turn the ideas into reality, right? So how far you are in your idea, it shows the investor how serious you are about that idea, and how, you know, it shows how much you're willing to kind of grow in your company. And this is called traction. So I can ask you right now, and a question an investor could ask you or want to know is, what have you done so far with the resources that you have, with the limited budget, right? You might say, look, I don't have enough resources. You know, I could have built something bigger. But the investor doesn't care about how much you lack resources or how much money you don't have. That's not what we're concerned about. We care about how resourceful you are with what you have. Okay, important point. how much you've done with what you
I,
limited budget that you have. Okay, so this is something you need to kind of show in your pitch slide. Show me what you've achieved with how little you have, and also time. Like, look, I've done something in 1 month that other companies have done in 6 months, for example. So time is also a factor that you can bring in. And this is kind of the point of showing traction. Let's go through some ways of showing traction on your slide. And I'm going to
so
list it
can I
from the...
ask another question with the previous
Sure.
slides as well?
Sure.
Okay. I don't think I have, personally, I don't have issue with this for the presentation, but for the judge, for example, or if we are pitching for a real pitch for fundraising, how far along you are, if it's, in our case, it's education. And education, not money, it's not the bigger issue. The bigger issue, it's quality of education to guarantee the level and the accuracy of the language, either it's Arabic or in English, and the language for those segments, yani for the special needs segment. So it might take some time to verify, to validate, and to validate it from Ministry of Education and, for example, BQA. So it might take some time. So this is for judge questions. So do you highlight if they ask how long it will take? As per financial numbers, it will take, for me, it's easier to state how long it will take to break even in terms of figures. But as a reality, how, sometimes there are bureaucracy to reach certain entities to get their validity, to get the information and confirmation. So how can you answer such questions for the judge?
Yeah, so you have some bureaucracy that you need to get through, government regulations that you need to push through. These are not attractive things to investors and judges. Definitely not. Definitely 100%. It's very hard for you to say, look, I have this kind of blockage that's blocking me. Your job, and you as the founder, your job is to kind of show that you, compared to another person, can get through these blockages and why, rather than there are these problems and please bear with me. So it's the way you communicate it. So, for example, you have some kind of blockages in the government, etc. Show that what steps you've taken to kind of get through that. Show about responses from the government. Show about a new regulation that you're working on. Traction is important. It's important for you to show what you've accomplished without the help of the investor. It's very hard for an investor to come and say, I'm going to put money into this company, and hopefully they will achieve and get through all these blockages. Rather, show us that you already took the first kind of climb on top of it. That's the best advice I can give you. At the end of the day, definitely don't make the focus of your pitch talking about what's blocking you. Definitely not. If those questions,
but I mean as a fact. Of course, when you are pitching, you will give all the positive things. You will not write any limitations or any negative issues. But if they ask how long it will take, you will state the financial. For me, coming from financial backgrounds, I can give a valid justification and valid questions, and I have everything stated, by filth, how everything is stated to come to the conclusion of these financial results, which might interest the investors. But I am looking as if I'm going to really execute it.
Yeah. Definitely. When they answer it, during your demo day pitch, my suggestion is do not put too much financials in your pitch. I would suggest you don't kind of tackle that question with actually putting, I know you're a finance background, and that's the problem. There are educated people, MBAs, finance backgrounds, etc., who kind of overbear on the finances and kind of get into too much detail. Rather, I would like you to talk...
How it will generate income, because I have the other side as well. How this project will generate income, how much we have to sell.
Exactly.
And when it will break even, so this model, it will be workable.
No problem.
In terms of financial, there is no issue with this.
Yeah, so perfect.
As a financial model, there is no issue with it.
Yeah, no problem. So I'm going to talk to you about how to kind of show your pricing, how to show your market, and what financials you should show. How about this, Hida? Let me go through the kind of presentation let me get to the pricing part, everything, and then we can see if the questions were not answered on a later slide. What do you think? We'll do that. Okay?
Yeah.
Perfect. So how far along are you? Back to your, basically it's important to you. The most important thing that you can show to an investor to show your traction is revenue. And I understand that many of you don't have revenue yet, or you haven't launched, but this is by far the strongest way. And I remember when I was sitting with a few startups who were preparing for to seek Series A funding, which is kind of the first level after seed funding. They were going around the room and introducing themselves. And each one was kind of giving an example, a brief about their company and what they do, etc. And as we were going on around the room, they were giving, you know, a nice description of their company, and then they were saying their annual revenue. And one person would say 2 million, and the other one would say 4, and the other one would say 6 million. And it struck me how much better the idea sounds when it's attached to a revenue. And it makes an investor say, wait a minute, maybe can you tell me about your company again? So by far, no matter what someone tells you, revenue is going to be the best thing. If you have revenue and it's strong revenue, or if it's growing, you better show it. The next best thing is going to be your contracts. And this might be related to contracts between you and the government, Huda, or anybody who has contracts or selling to kind of enterprises or to companies. Any kind of sales contract, future contract, agreements with suppliers, factories, even a letter of intent. They're an example of customer traction interest. So this is the second kind of strength that you can show. And I just want to make a note on hard tech. Like, I think we have a company called Smart Shoes here. Any manufacturing startup or anybody working with like kind of physical kind of products, the cost of development and design, the manufacturing is usually capital intensive, right? Because you need to kind of find a manufacturer, probably in China or something, to kind of work on the parts. And maybe not for shoes, but I guess for other kind of hard techs, a very good way of showing an investor traction is a letter of intent, an LOI. It works very well. LOI is non-binding. It's a non-binding contract, but it's very hard to get it, especially from companies. Usually because it looks like a contract, they take it very seriously. And this is true for high-tech companies as well, or anybody who has kind of selling to an enterprise or so forth. So contracts are important. Users, if you have users, maybe you're not making money. Maybe you did a pilot launch. You want to talk about your user engagement, not acquisition, but engagement. How engaged they are. Do they keep coming back to your product over and over again? This is your third strength. Then we can talk about pilots, right? And then after that, the next best thing would be awards. If you received any awards, being part of an accelerator program, winning an award, it's one of the weakest ones. But if you don't have anything better, that would be the next thing to show. And surveys, which is going to be the weakest. Surveys is usually the weakest, generally speaking, from best traction to worst traction. Okay? Unless the surveys are very well made, I guess, that you can kind of receive it. But all of this are worth putting on your pitch. Definitely worth putting on your pitch. Okay? But just keep in mind what investor looks at as the strongest and what the investor looks at as the weakest as well. This is also really quick. This is an example of how not to show traction. Too much text, too many boxes. I do not care about it. It's a headache. All right? Just don't want to spend too much time on this. Let's go to the next question. And Huda, this is back to you. How will you make money? I see many startups afraid of this question. They feel that their monetization is not good enough. If it's advertising, then say it's advertising, right? Be upfront about it and say it. There's many companies who have been successful with advertising. Not the strongest monetization. It requires a lot of kind of users on your product for advertising to kind of be a good income. If you change your monetization strategy, and this is something else, in the future, if today you pitch that I'm going to make money this way, and after 1 year or 2 years you change it, nobody's going to put a gun to your head and say, look, why did you change it? Your pitch is not a promise. It's your pitch is what you think the best solution for your product is today. That might change tomorrow depending on your knowledge of customers. So always think of the best way to monetize. Okay, so let's look at a few mistakes. And these are actually from your pitch decks as well. Some of them are from your pitch decks. The first mistake is giving too many options. founders, they give too many options for pricing. We can make money by giving premium membership. We will add advertisement. We're going to give premium to our suppliers, etc. So this gives the impression to an investor that you're all over the place, number one. You don't have a solid plan on how to make money. It's like taking spaghetti, throwing it on the wall and hoping like some spaghetti kind of sticks on the wall. Okay, that's how it seems when you give too many options. You're not sure about it. It doesn't give importance to some of them. And number two is giving a complex scheme or an innovative scheme, I guess. And because founders are innovators, usually innovating on pricing is not a good idea, generally speaking. Now, sometimes your pricing is going to be the new way. And complex pricing structures or something that is new is kind of something that's never tried before. It's kind of makes an investor worried and kind of question it, right? And I'm going to, I guess, bring some examples from some startups today. Not only do you have to kind of now convince the customers, hey, please use my product, but you must also kind of convince them, now can you please accept my new pricing scheme as well? So now you put two bumps in the road, right? First, you need to accept my new product. Now you need to accept my new way of charging you. All right. Simplicity usually is the best solution for pricing. Not in all cases. So I want you to kind of take a look at that. And of course, it's telling me that Google will buy us. We don't need to charge anything because Google will buy us or some big company will buy us or, never rely on selling your company as the way out. And this is called exit strategy. The chance that, a big company will buy you out is very, very small. Nobody should invest their time kind of building something on the hope that someone's going to buy you out. And I've heard this before in pitches, actually. And so just don't do that. Of course, let the investors think about your exit strategy. Let them kind of imagine. Give them the imagination. But don't tell them specifically that, oh, Google will buy us, or we will go to IPO, or we'll become a public company, or whatever the case is, okay? All right, let's talk about pricing now. And this is specifically, I think is going to answer your question, Huda. How to price with the market in mind and also the investors in mind, okay? So venture investors, they're looking for 10 times the return on their investment, okay? Which means if I'm going to invest with you 100,000 today, I hope that after 2 to 3 years, that maybe my 100,000 will become 1 million. Hopefully. This is the best case scenario. If it's my 100,000 is 500,000, I'll still be happy. But I want to kind of hope that, right? So I want you in your pitch to kind of show me 100 times growth potential, not the 10 times. So I went through your pitch decks, and I feel that some of you should reimagine your business at a larger scale. A lot of you your presentations are almost like small businesses. And part of it is imagining that growth. I want you to first of all assume that you have as much money as you need. You have everything, unlimited money. What can you do with your company? That's how I want you kind of to think about your company. In other words, can you get your company to a revenue of 100 million? Now, it's not important, 100 million BD, $100 million. We're talking in that range, right? From 37 million BD up, okay, per year. This is kind of the scale that we want to kind of grow. And if you can go beyond that, even better. So let's say that you're charging $10 per year. That's a small amount. $10 per year is a small amount per customer. Okay? And that is that's your pricing. Let's say, I don't know, it's subscription, $1 a month, approximately. Okay? The question the investor will look at it and say, okay, how much customers do I need to make 100 million? This is a simple concept. Any finance would understand it very simply. How much customers do I need to get 100 million, right? The answer is 10 million customers, right? So the question that comes to me is it easy to achieve that 10 million or not? 10 million is a big amount of customers. So really charging $10 a year is very hard because you need 10 million customers to get that, that scale that we're looking for, right? If we charge $100 per year, then I need 1 million customers to get that same amount, and so forth. And here's when you're at 1K, I think it's close to many of your companies where you're charging 100 BD or 10 BD Probably 10 BD per month is between the two. So you need 100 or 120,000 customers. And if you're selling something to enterprise customers, then you need less, and so forth. So always connect your market to your pricing. And I see this disconnection happening a lot, where your market and your pricing are not connected. It doesn't give the full picture. Okay, so in essence, the only finance slide you need for your pitch is for your unit economics to make sense. My price, my market, my projected revenue. That's the only thing you need. I don't think you need any other finance slides on this. If you can show that this is my price, this is my projected revenue, we have a high margin. If you need more information, I'll provide it to you. If you want to talk into details about my budget, I have it ready on my Rolodex, right? But I don't need to present it to you today. If someone asks you a question about it, say, yes, our cost is approximately 30%. So our profit is this much, and so forth. Have those information for questions, but don't present it. I've seen, I don't know if we have everybody here, but I've seen some companies, the Gold Souk, for example, online. I've seen your pitch, and it could be an example for everybody. Taking the regional and global like gold sellers with your pricing structure, you need 120,000 sellers for you to reach the 100 million. That's a lot of sellers. 120,000 if you want to reach that scale. And we're talking about global scale. And getting 120,000 gold sellers on your kind of thing is kind of a long shot, especially if it's a very target market. Instead, if you have a commission-based structure on monetization, then you can have a couple of hundred sellers and still reach the 100 million. Okay, so even if you're charging 5% commission or so forth. So by charging a fixed amount of fee, you limit your growth. I understand that you have many monetization options, and I've seen your pitch, and usually having many monetization options is a bad idea because it weakens your main monetization option. And advertising is usually not a good option when you don't have enough customers to make your advertising worth it. Okay, so I'd leave advertising out of it in your case, and we can talk. And I think one of you had innovative pricing. I think it was Tripod. Very comprehensive pitch deck, first of all, well made, but way too much information. Pricing the client, of course, instead of the freelancers. I think that's kind of your innovation in kind of pricing. Get ready to answer questions or kind of justify that this might actually cut a segment of your market of small businesses and individuals who might not like that 30% kind of how much you're charging them and so forth. So a bottom-up approach to market strategy goes a long way, explaining where you're coming from. All right, and I think there was another company, Urento, who provided too many pricing schemes, takes away from your main monetization. Look, I love Urento's idea, and I'm willing to actually take some of our properties and put it with you. I have 24 apartments that I'm renting out, 100%. I'm gonna give it with you guys. But I feel that you don't need any other monetization except the per unit monetization. And I think you're also undermining your market. You know, you have 1,000, you're saying 1,000 plus units. I think you should talk about 100,000 units in the GCC region. I think every unit should be under you. I don't think you should limit yourself to this 1,000. It's also, once again, small business. Talk about 100,000, talk about 500,000 units in the world. Talk about 1 million units globally when we grow. And stay with your fixed price. It's a really good idea. So overall, I think generally, I could dictate an entire session on pricing strategies. And I wanted to kind of bring it up a bit today. But the main points are, keep your pricing simple. Justify it with a market that is worth investing in. Your pitch is not a business plan. It's a teaser trailer. That's all it is. To get investors to knock on your door. Hey, excuse me, can I learn more, okay? And one more thing, one-time purchases are hard. So when you're selling something one time, it's hard, like, you know, physical devices. So they don't like it, which means that you have to be creative, especially if you're going to sell smart shoes, which is a device, you sell it, it's one time. You need to kind of have some kind of subscription, add-on service, maybe kind of features, have a plan to roll out new shoes, new designs, etc., to solidify your growth. So this is something you need to look at. We're running out of time, so I'm just going to go through this. How will you make money? This is Airbnb. I like how they present it. I'm a fan, as you can notice. The way they explain their kind of monetization is really simple. we make $20 per booking. Very simple. We have 10.6 million. We expect this many, so we made 200 million. Very simple monetization. Another example of a good monetization is here, recurring fee on rents. They're saying these are people who are in the rental industry and they make a 15% on rents. Very simple monetization, which means $200 per month per resident. And it doesn't matter, when they talk about their market slide, they can show us how they can make money. Okay? So keep your pricing simple. Let's go into what makes you special. And this is basically your opportunity to tell the investors what the biggest players in the market the biggest players in the market, your competition, what they don't understand or they don't do it well that you do well. That's what you want to show them. So you need to make the investors, when they're listening to your pitch, to say, aha, interesting. I wonder why nobody thought of that. Oh, that's how you do it. Interesting. So do you have traction? So if I look at you, and usually I'm kind of descriptive in when I'm judging a startup. When I look at you and I go like, I shrug, right? It means that I already knew that, right? You're telling me something that's common knowledge, which is not what you want to do. If I go, interesting, it means that you're telling me something new, something with insight, and that's what you need to kind of focus on. And if I'm confused, if I look confused, it means that I don't even know what you're doing, right? So remember the first point. So let's look at a few things that can make you special, that can make an investor say, yeah, you know what, that's really nice. If your product is 10 times better, this can be any way, right? You develop a product that does something 10 times better. It needs to be really good, right? Efficiency, cost, whatever it is. It does something 10 times better than what's in the market. This is one way. Keep in mind, I'm giving you all the ways. Your startup doesn't need to match all of them. Choose one or two or three, and then you'll be in a good position. Another way to seem special is market. The market that you're targeting, if it has 30% growth, right? So it's a market that's growing fast. So that's something that we look at to make you special. You can mention it there. The founders are specialized. If for example, we're talking about a biotech company, right? And the founder is a PhD in biotech, so that makes this founder specialized. If you're working in the education industry for 10 years or 15 years, mention it because it makes you special, all right? Those kind of things. Monopoly, and I don't mean monopoly, I mean if you feel like you have great barriers to entry to your industry, which means that you have enough network effects, which means, how can I explain it? In case you don't know what network effects are, basically you have enough kind of growth in your market already, or traction, that it's very hard for people to compete with you. You have enough agreements with companies that it's very hard for other people to kind of budge in. These are advantages. Maybe if you have it, kind of share it. And of course, acquisition. Zero CAC. CAC is cost. It's the customer acquisition cost, which means that if you're getting a lot of word of mouth, kind of your marketing is being done, where a lot of people come to you without you spending money on advertising, then mention it. Maybe people are interested in your idea. Maybe you have a kind of faction who are very kind of, yes, we care about this company, and then share that. These are things that make you special. And I've seen ways of showing that you're special is comparing yourself to competition. And I think one of the pitches actually used this famous kind of compare myself. For example, my company's name is Front. Look at all the competition. I have a better messaging experience, and I'm more business ready than most of my competition, etc. So compare yourself to competition. Don't shy away from your competition. Okay. And the last thing we're going to talk about is who's on your team. If your team has done something very impressive, then I think you should kind of say it, right? If you founded a big company or something made investors money, don't spend a lot of time on this. Of course, 1 to 2 sentences maximum. So let's look at what investors look at. First of all, and this is going to be kind of controversial, but it's going to be the truth. First of all, relevant achievements. If your team has done something kind of very impressive, you made people money, I guess, by a previous kind of startup. If you've done something big for the industry that you're already working in, then mention. If not, then you don't need to talk too much about. Keep it simple, talk about the experience and move on. All right? Generally, investors are looking for 2 to 4 founders. We invest in one-person founders generally, but there is a bias. And we've talked about it actually in a investor meetup recently about the biases in venture funding. And there's a strong bias towards people with 2, 3, or 4. And that's kind of the golden kind of Goldilocks zone of where we like founders to be. And the reason is because, putting a lot of pressure on one person to kind of build a company, market it, fundraise, is too much. 2, 3 can kind of probably help. Another thing we look at with founders is, do they have the skills to build it? We want to know how many people are technical if they're building a technical product versus business. Hopefully it's 50-50, right? Hopefully you have technical people there who can build the application, as well as people who can kind of market the application as well. And, this is a problem that I've talked to some startups, and I've helped startups without a technical person to kind of introduce them to some technical people that maybe there is something that they can work together in. It's really important for us to answer that question. Are you going to be able to build it? Of course, we don't want you to take the money that we're investing in you to go and pay a development shop based in India or based in Ukraine to kind of develop it for you. Rather, we want to see that you can build it yourself. This is an important point, that sometimes investors kind of are open about it. Sometimes they talk about it in closed doors. And we want to make sure that you guys know each other for a long time. And you're not going to break up, right? We make sure that, they're going to work together. So how long you're going to work? Ideally, I think if you know each other for a year, 6 months to a year, I think it's good. We want founders who are close, they trust each other, so that we avoid problems of founders breakups in the future as well. And of course, we want founders who are committed, right? You want to all be working full-time on the business. You want to all be committed. Showing commitment is important. Sometimes you have to do your part-time job, of course. But if you can show commitment in other ways, it would be great. All right? Keep in mind, I'm talking a lot about these things, but each question can be answered in 1 sentence to 2 sentences. So although I'm talking about it in a paragraph, and it's really kind of simple. It's just the ideas that we're looking for. So just a few notes before I head off. I want you to all assume that you will never raise money again. And I'm talking about investor money. And this is an important topic for leverage. Always assume that you will never raise money. Assume that you're never going to get money. Will your company be able to survive on its revenue and grow? This is called default alive, which means that if you don't raise any money and you don't get any money from outside, only your own resources, will you still be able to grow and not run out of business? Whenever you realize that you're not default alive, that if you have a time in the future that you will run out of cash, it means that if you don't get funding, your company will shut down. It means you're default dead. This is the concept of default dead versus default alive that I like talking about a lot. If you show the investor that you're default dead, the leverage transfers to the investor. Keep that in mind. If you show them that there's no way you can grow it organically, even slower, I don't care if you grow it slower, there's no way you can survive, then the investor is going to take a step back and the leverage will be on the investor's side. So my suggestion is whenever you realize that you're default dead, drop everything you're doing, adjust your expenses, fire if you have to. I've done it before in my companies. If you have to kind of get yourself to default alive, you need to have the leverage over the investor. Even if you are confident, there's always a push and a tug between investors and startups. There's always this kind of, even though they're kind to each other, there's always a push and tug internally. If you have a few months of runway left, the investor is going to take advantage of that, okay? So you just want to remain strong. And a few notes on COVID-19 and funding. And I wanted to kind of talk about this with everyone here. Really important points, especially whether you should bring it up, whether you shouldn't bring it up, and things like that. Before the pandemic, startups were competing against other good startups for investor money. In the current climate, and of course, we're going through some economic kind of hardships, I guess. They're competing against equity markets. We're competing against cash. We're competing against investors who have commitments with their startups that they've already invested in the past, right? So the selectivity of who to invest in has risen up by 1 point or 2 points. If you're building a business around physical events, physical retail, things that are heavily reliant on, discretionary spending, without knowing whether the economy will recover, it's going to be challenging for an investor to kind of make a decision on an investment. They need to kind of think about it. A lot of questions will be asked. Companies that have kind of an easier time raising capital will be the companies involved in online education, of course, automation, reducing touch points, kind of things, things that can help people survive. I would point to the freelance industry as well, is a good point. Fintech, contactless services in fintech specifically. Innovations in tourism industry and so forth. Anything that reduces touch points will have an easier time. So just a few points. The first thing I want you guys to do is adjust for it. And I want you to adjust for it in your communication and in your company. If you are in an industry that is somewhat affected, you need to tweak your product to be successful now. And do not think of it as a temporary product. Don't say, I'm temporarily doing this to survive COVID, and then I'll switch back. Instead, think of it as part of your overall success story. Communicate it as your overall success story. Do not separate pre and post-COVID, please. No, okay? Because it'll show that COVID has affected you. Instead, you need to embrace it. Okay, this is really important. The second one is plan for success. If you go to an investor and you say, look, we're waiting for COVID-19 to be over, or we're waiting for people to go back to work, or we're waiting for this to happen, the investor will think, okay, come back to me when you finish waiting, right? There you go, you lost leverage. Come back to me when you finish waiting. Instead, if you embrace the situation, you develop a plan for success within the pandemic and outside the pandemic. And I've worked with some startups to actually do that, and they've actually successfully funded after they were kind of losing hope. This is like a once-in-a-lifetime event for all of us. But investors, including funds I work with, are still looking for great startups. We have funds that are waiting, looking for great startups. Okay, so there's nothing that has changed in the industry, except we're more selective and we're kind of more cautious. So usually media and people, they like to inflate the problem and expect the worst, right? They always show you the worst case scenario. And I think the new normal is, I guess, a normal where we're the same people, right? With the same desires. We have the same interests, the same needs to be around others. And I believe the last effect, or I guess, the effect that stays with us the entire time, is that the pandemic is about like technology adoption and the transformation of many industries to utilize kind of such technology, right? And I guess this is, where we all come in. People who are investing in startups and the startups themselves, specifically introducing the new startups, okay? That's it. Thank you, everybody. If you have any questions, I can take them now if anybody wants to stay around.
I'm sure everyone has a lot of questions specific to their to their businesses and everything. Thank you so much,
Sure.
Hamad. We are a little bit over the time limit, so I believe, guys, if anyone we can take 2 questions, and if there are any more specific questions to their businesses, I think you can save that for a one-on-one where Hamad can, really focus on each, business on its own. So we can take 2 questions about now.
I think they're, in chat.
Yeah, I think.
Yes, there you go.
Yeah, so I think so far I haven't seen any questions.
Okay.
Sorry. Zainab, you can start first, and then Hanan will have you next. All right?
I just asked, how can we book one-to-one session?
Oh, okay.
Yeah, I have a number here. It's on the slide, if you can see it. It's Jem. She's my personal assistant. 360-50830. Just add her on WhatsApp and tell us your best time, and they'll try to kind of match my schedule with yours. In case I cannot meet you tomorrow, maybe it can be day after tomorrow or sometime this week. But I've given everybody here priority on my time, so don't worry. We'll get through this. Hopefully before the demo day, so we can kind of help you with the judges as well. Okay?
Yeah.
Help you with the judging. All right? It'd be great. No problem.
And Zainab, I've also included the number in Slack. So if you just go to your to general Slack, you'll find the number of Gem there as well.
I wrote it already.
All right, sounds good. Hanar, I think you have a question?
Yeah, no, I just wanted to break the ice and say thank you to Hamad. It was quite the insightful presentation. It was extremely eye-opening, especially when you dug into the pricing strategy. So yeah, I'll be doing the same. I'll be reaching out to Gem, and would love to get your insight.
Definitely. Great to meet you, Hanar.
I
Hanar,
know,
I know you, man.
you again, and I know you.
Long
very
time.
well. A long time.
How's
no
Ahmed
see.
doing?
He's
I
good.
hope he's doing well.
He was on this call. I'm not sure if he's
Okay.
still on here. I think he is.
All right.
But,
well, I mean,
but yeah,
looking forward to catching up, I guess.
Yeah,
Great.
for
Looking
sure.
forward to it.
Definitely. Thanks, Hamad.
No problem. My pleasure.
All right, I think that's pretty much it. Again, thank you, Hamad. I feel safe to say that it was a pretty enjoyable session. You shared a lot of your experience and knowledge with the teams, and it's pretty clear that a lot of people have a lot of advice that they would like from you. So once again, thank you very much. And as Hamad has mentioned, and what I've mentioned earlier, if you want to book a one-on-one session with Hamad, you can just jot down the number that was previously on the screen, but I've also included it.
Sorry.
It's okay. I've also sent it over on Slack, so everyone you can go on the Slack channel and you'll find the number of Gem there and set up a meeting directly. All right. Thank you very much, Hamad. Thank you everyone for joining today's session. All right.
Take care. Bye-bye.
Have a great day. Bye-bye.
Thanks, everyone. Goodbye.
Bye.